If you only look at ROI, greed is in play. If you leave yourself to that, what's going to happen is that you're going to sell your house and buy lottery tickets. I did some risky stuff and learned from it. If your parent is not a billionaire, you got to learn it the hard way. You're taking responsibility, so you're not crying the fact that you're not rich. What's the point of buying the fifth property if the first one does not have tenants? Are you stupid? I had this view that anybody who invests in stocks and options is a gambler, basically is not a responsible person. I have a friend that lost 350,000 with this, another one 500,000.
All right, everybody, we got another episode on our hands. I've got my friend Fadi on today. Fadi, thanks for coming on. If you don't mind, can you make a quick intro about yourself, what you do, what you're all about?
Okay, thank you, Bo. My name is Fadi, and I have been in corporate for about 30 years. And the thing that was bothering me is that I always had really good paying jobs. I'm an engineer. I have a master's from U of T. And the issue is that I can't go to the trips that I want to go to. I don't have a lot of money all the time. And it was weird, the fact that I did everything that my parents told me to do, get good grades, get a good education. So all of my life, I have this thing that I was always working on how to be wealthy in a way that is responsible, basically. I don't like gambling, though I did some risky stuff and learned from it. So basically, I'm a founder of Legacy Wealth Builder Academy. And what I do right now, which I really enjoy doing, is teaching people how to invest in stocks and options responsibly. I'm a real estate investor. And I had this view that anybody who invests in stocks and options is a gambler, basically is not a responsible person, which has moved. I'm sure we're going to talk about that, changed. So that's kind of what I do.
So this is an interesting topic for me because I've kind of just started to dabble in on this area because I've actually had a couple other guests that do similar to what you do. They invest in the market. And there's so many platforms now that you can use to be able to invest on your own. You know, when I was a kid, you used to have to go to a brokerage, sit down with them, and then they would advise you on they think you should invest in. But now everything's right at your fingertips. So your academy, is it like it's a course, or how does it exactly work?
It's basically a 12-week mentorship. And the reason I did not want to make it a course, like a bunch of videos, is this stat that I know is that 3% of people who take a video course finish it to the end. And you can imagine the 3% of the people who took the course, how many of them really implement it? It's very hard. So it's basically, it's an industry that is built on just selling stuff that people will never do. The other thing here is that because I took a lot of took a lot of courses when I started this 10, 15 years ago, I know the things that made difference in my journey. Because in the beginning, as I told you, I thought that I was a real estate investor, and I thought that anybody who is dabbling with the stock market is a gambler, and rightfully so, because everybody around me was losing money. I didn't know why. I just knew that it's like the issue is in the whole arena, and I was wrong, basically. So the course or the mentorship basically has a few different elements, which I took from a lot of courses on the elements of what makes people successful. You cannot learn how to ride horses just by watching videos, or how to dive, or how to swim. You got to go into the pool and get somebody who can give you some feedback so that you can learn something. So the main elements of the mentorship program is, number one, is the theory, of course, but the theory is commoditized. You can find it anywhere, like YouTube. The second thing is structure. The fact that every week you meet with your coach in a small setting, and this allows you to, even if you do not do the homework, which only takes 10 minutes a day, even if you do anything, because we are all busy people, and there's a lot of things that come in our way in our life. Even if you didn't do anything, there's a time in the week whereby you stop, you reset, you renew the promise to yourself, and come back again, catch up, and move forward. Third is feedback. Without feedback, you cannot move forward. It doesn't matter, even if you have a dissertation or a research that you're doing, you have to have a professor who can tell you, you know what, you're not on the right path, or you're doing it well, because you don't know. You're in a room that is dark. You have no idea. The other thing here that is very confusing is that there's 10,000 ways that you can follow in YouTube, and there's a lot of ads that tell you can double your money in 2 months and all this BS. So you need someone who can take your hand, especially at times whereby you're doubting yourself the most, right? And it's very difficult to do it yourself without this feedback. So the theory, the structure, the feedback, and the fact that in my program, my metric for success is not how many I sold, how many seats I sold. It's how many of the people who went in graduated. How many,
Mm.
what the promise that you're going to go at the end of the 12 weeks, um, being able to do this so that you can make money and pay for what you've done. And very important as well is that in this period where you're training, you don't lose money. So in the training period, it's completely risk free. You cannot lose a cent because I insist that people use something called a paper trading account. What is a paper trading account? It's an account where everything is real. By the way, it's free to open it. Anybody can open it. They give you $1 million for free, like monopoly money, to train. Everything is real. The stocks are real. The prices are real. Everything is real, but you can't lose money and you can't make money, of course, because it's not. So, and in this environment, you can train. You're not afraid to make mistakes because everybody does mistakes. Like one of the students who came to me, she told me that she clicked the button before she came to me, and she lost $10,000 because she clicked the wrong button. We don't have time for this. Like we don't have, like we're at a stage in life right now whereby I can't. It's not that I can't afford to lose $10,000. I don't want to lose a cent that I don't need to. Right. So
Hmm.
the main elements of the program is the fact that we meet for 12 weeks. That's how much it needs for you to absorb it, and be good at it. And more importantly, not just learn how to make money, much important, how to not lose money, how to not lose your
Hmm.
capital. Because there's so many ways out there whereby you can make a lot of money in month one, two, three, and four, but month five comes, there's a market meltdown, you give back all the profit plus your capital.
Hmm.
Much more important than making money is to not lose money, right? The first rule of Warren Buffett, but he never told us how not to lose money. But so very important that you are responsible, and the fact that you need to balance ROI and risk, because if you only look at ROI, greed is in play. And if you leave yourself to that, what's going to happen is that you're going to sell your house and buy lottery tickets, because that's all what you're looking at is the ROI. Pay $5 lottery ticket, you get 5 million. What a great ROI! But you need to look at also risk. If you only look at risk, people used to get paralyzed and don't do any action. Never been in the market. I will never buy a rental property because I'm waiting for the perfect timing in the market, which never happens. I will never go into the stock market because there's so much risk. So we need a healthy dose of both risk and ROI, always balancing those. And by the way, this balance is different for people. So as part of my program, I teach people how to do it. I don't tell them what trades to do. I teach them how to evaluate by themselves. So that some people are a little bit more adventurous. Of course, I have parameters. I tell them if you're at this point, then you're in the greedy part, you're in the risky part. So there's some leeway, but you always need to figure out this risk. And if, like a child, if you're crossing the street, if you're oblivious that there are cars, it's a matter of time that an
Hmm.
accident can happen. So you always need to figure out. And my system is very clear. For every hour, it's easy, by the way, to know the method, the strategy of investing. For every hour you learn how to invest, you need to spend 2 hours learning how other people lost money in your situation, right? Because if you don't do that, if you don't know how people get, uh, like if you, as if you're driving a car, driving a car is so easy because it doesn't need a PhD student to just push the gas pedal and it's going to move. The whole game of driving a car, learning how to drive a car, is not to be involved in an accident, even if the market is bad, even if the other drivers are risky or they are not, or they're drunk. How can you make sure that you don't get involved in an accident? That's how
Hmm.
learning. So my mentorship has all these elements in it in terms of the structure, the feedback, the fact that you're in the pool starting week one, even if you don't understand it. Remember, it's paper money, so there's no way you can lose money. So starting week one, I teach them how to white puts, even if they don't understand anything at that time. But the idea is that you're in the pool from week one, because if you want to know how to swim, there's no other way. It's not by YouTube videos, by theory. You have to get implemented. And every week, I add one more layer of intelligence, in terms of they understand step by step what are they doing in terms of writing puts and calls, understanding the risk, understanding how to make things better, how to avoid mistakes. And of course, it's a group setting, small group, 5 people. So you see from the feedback, you will see what you did wrong so that you can improve. Also, in this program, you do something like 300, 400 trades. So you get exposed to a variety of situations where you learn what to do, as well as you see the mistakes of other people, which is a great learning opportunity.
And so in your program, like what platforms are you recommending your students to use for all of these trades?
So it's not that it's a recommendation. I use IBKR, Interactive Brokers, because I can't have each one of them having their own brokerages. It's going to be a mess. So in the training, I tell them it has to be IBKR. It's free to open. I don't get any money by telling them to do so, but it has a lot of advantages. It's very cheap in terms of the transaction afterwards. A lot of people actually, once they go through the training, they keep IBKR going forward. But there's no issue. Once you know what to do, you can go back to your own brokerage easily. Not a big deal. But in the training, I use IBKR.
And so, in that platform, that's where you could use, like you said, the monopoly money to be able to test
Correct.
some of the.
It's called the paper trading account, and I think it's available in other brokerages as well. But it's free to open. You don't have to pay anything. You don't even have to fund your account. And for me, that's the responsible way of learning. You can't start learning how to swim by jumping into the mid ocean with waves, right? That would be crazy, right? So you gotta go into the pool where there's no waves, and you go to the shallow part of the pool because you want to train, but you don't want to die, right?
Yeah.
you want to know how to do this without losing your capital. And if you start dabbling without proper training and safeguards, what are you expecting? You're going to lose money. And I don't want to lose money at all. At all.
And so with this platform, you're able to do not only standard trades, but long, shorts, options, calls, all of that stuff.
You can do everything in paper trading or live trading. It's kind of the same ID and password, just a button. When you go into the thing, it tells you want to go to paper trading. And when you go to paper trading, it tells you this is simulated trading. So it's very clear if you're doing paper trading or live trading. And I tell them in my program, you're not allowed to do any live trading before at least 8 weeks out of the 12. So some people are very smart. Everybody's smart. And I have this person, the friend, he told me, Fadi, I know I'm very smart. I'm going to start live trading in 3 days. And I had to just wait. And rightfully so, he got it after he made so many mistakes in the first 6 weeks. He was happy that he did not start. But again, overconfidence doesn't help you. You need to have a little bit of confidence, but you also need to know that you don't know everything, right?
Yeah, right. With these platforms and the teaching that you're doing, and there's so much automated trading and AI now built into a lot of these platforms. Does your academy get into that at all?
No, no. I teach people how to do it themselves, not sell a bot or And in my view, who knows what's in tomorrow? But for now, I do not see any AI that I can trust them to. Because here's the thing: reality is there's a lot of market manipulation. That's reality as well. So, and there's a lot of scams out there. Like one of the things I just was weighing heavily on my heart is that I have 3 people that I know in my circle that they're very smart, but they go into these WhatsApp groups, and these WhatsApp groups, supposedly there's an expert that tells them what to buy and when to sell. And it's a scam, basically. They get them in a WhatsApp group and they push them to buy something. And of course, when somebody recommends something to you, there's a 50% chance that the price of it will go up and you'll be happy.
Yeah.
And there's a 50% chance it's going to go down. So they get the people that are trusting them, that the trade worked for them, put them in another WhatsApp group. And they do this 3-4 times. They end up with few people that, these are on hundreds of people. They get few people that it actually worked with them 3 times before. So they are completely convinced that these guys are like experts in what they do. And then what happens is that these guys have a lot of stocks and a certain stock that they want to dump, they want to sell. So in the 4th time, they push a lot of people to buy, and they push you to give you screenshots of how much did you buy. And as soon as a lot of people buy, the price of the stock goes up. Sell, and then the price of the stock tanks. So I have a friend that lost 350,000 with this, another one 500,000. So there is market manipulation like this. So I don't trust that the AI can really see all of this stuff that is happening. So I anyway. So not that much so far to answer your question.
Now, with your students or and whatnot, I mean, is this something that you think that people could do and basically quit their 9 to 5, their W-2?
Okay, so it's not a get rich quick scheme. So let me qualify. I always start with the stuff that that calibrates people. It's not a get rich quick scheme. The average percent that you should expect from what I teach is about 24% ROI per year, which is 2% per month. So that's double what the SPX or the market gives you. The market gives you about 11%. Most fund managers don't even meet the 11% per month, right? So
Yep.
the objective you're going to do it yourself is that you need to beat the market, because you have the choice of just buying the SPY and just wait, do nothing, and wait for 10 years. So this will give you about 10-11%. That's the average for the last 100 years. So if you're going to do it yourself and give a little bit of time, by the way, the time commitment that I ask for people is just 10 minutes a day. That's all what you need, because it's not day trading, it's not speculation. So if you're going to do that, you expect at least double the market. Can you do better than 24? Yes, of sure. For sure, I'm doing much more than that. However, I don't like to tell people, because it attracts those who want a get rich quick scheme, right?
Mm,
And I don't like that. I want people who are calibrated, they have a grip on their fear and greed, right? A healthy dose of both is very important.
mhm.
There's some stocks that they can give you 20% a month. However, these are really bad things to do, because you have to do this on good stocks, because you're curbing the risk. If the market melts, you're going to be doing a lot of money doing 20% a month. And then in the month
Mhm.
6 or 7, once this crashes down, the bad thing about it is that it will never go up. If it's a bad stock,
Mhm.
it's a company that's not making money, there's no chance for it to go up. People need to understand that the stock market in the short term is a bunch of drunk fools running around. Now, it is true, and this is not bad mouthing. The price of the stock has nothing to do with its value on the short term, which means Meta is a really good stock. They're making so much money. So it's a good stock. But just because there's a war in Ukraine, Meta will go down. Just because there's tariffs, the market will go down. Just because there's COVID, go down. None
Yeah,
of these stuff will affect the revenue and the profit of Meta. It just,
right.
if you're fearful, you'll just, people sell and the market goes down. So in the short term, it has nothing to do with the value of the stock. And if you
Mhm.
don't know, most people buy and sell stocks without understanding at all what is the real value of the stock. For me, Meta at $600 is a cheap stock today compared to BlackBerry, which is $3.50. Right? BlackBerry
Mhm.
is not making money. It's losing money for the last 5 years. It's not a good stock. It's not investable with me. For me, only 1% or 2% of the 6,000 companies in the market that are investable. So so you need to know, and it's not that hard. You need to know what is a good stock, because you need to define whether you're going to invest. You're an investor, which means that you're doing stuff that you're not just happy with, but you're calm and confident. That's the mode. Or a speculator and a day trader, and you're really figuring. You don't care if this is a good stock or not, as long as it moves, so that your bet of it going up or down. Very stressful life. Chance of losing money is humongous. That's why everybody's losing money, because it's simple. It's calm. It's boring. It's very simple.
Mhm.
It's science.
Mhm. Mhm.
Look at the extreme case of Warren Buffett in terms of he buys something and waits for it 35 years. He doesn't do a lot of things every day. That's how it should, and he's widely successful. Of course, I don't have 35 years of my life to wait for something. So I need to use options to leverage a little bit and do something, but I don't lose sight of the risk ROI reward, and doing it in a responsible, I call it responsible investing, right? And
Mhm.
it's designed for busy professionals. Can somebody retire? Yes, but it's not tomorrow. Right? So if you need $1 million to retire, again, I have this retirement calculator that when I sit down with people, that's the first thing we need to do is how much money do you have right now? What is the expenses that you need to have at retirement based on 11 or 12%? This is how much money do you need at the uh, age of retirement? How many years do you have to retirement? And then we have a plan of this is what you have today. This is how many years do you need to invest at 24% to get to that X number, whereby if you have this X number, you can retire comfortably, right? Based on
Mhm.
inflation and stuff.
Mhm.
So can it happen? Yes, but it's not tomorrow. It's not something that, it's not a get rich quick scheme. You have to be responsible and you have to do the work, which is not really that much if you spend 10 minutes a day.
Can't you mitigate a lot of your risk though by with some of the automated trading by putting in, stop losses and stuff like that? You buy a stock at $10, and if the stock starts, approaching less than 10, the system will automatically sell it for you.
So in my system, there's no stop losses because, again, I'm not in the trading world. What I
Hmm.
do is that I focus on only two strategies of options. And if you follow what I'm saying, theoretically, there should be no realized losses. So
Mm.
if you buy Meta at 600 and it went to 500, you really didn't lose. You only lose when you sell it. So that's called
Yeah.
unrealized loss. So
Yeah.
we focus on good stocks that even if it went down, we know Peter Lynch, which is a great investor, had this law that says that there's absolutely no correlation between the price of the stock and the value of the stock in the short term. And short term in the stock market is 2 years. So in 2 years,
Mm.
even if it's a good stock, it can go down continuously. Like Meta went from 400 at the beginning of 2022 to $80, lost 80% of its value. If you leave yourself, if somebody who's not educated, the normal person in the stock market buys when it's at the top, waits till it goes down, and then sells at the bottom. That's the normal psychology of a normal person that doesn't understand anything. But if you understand, if you have this intelligence doesn't mean brain power. Intelligence mean information. If you know that Meta is a good stock and it's making money, it has always been making money. Profit is great, the P&L is great, and the EPS is growth is increasing, which means that the forecast is that they're making money now, they're going to make money tomorrow better than today.
Hmm.
The people I know that they're really good, they were dying to find money to buy it at 80. Right now, Meta is at 750. So in the short term, forget about what the market is doing. Forget. Here's the thing: the traders are the opposite. They are so much into what is the market doing today. So if the market goes down today or for a month or a year, they think it's a disaster. It's not a disaster. The normal behavior of the market is that it breathes. It's not a straight line up. Overall, it goes up by 11%, but it inhales and it exhales. If I expect from my son that he only inhales, and for me, I think that's normal, once it exhales, I will think there's something wrong and I will have to react.
Yeah.
When the market exhales, it's normal, you guys. It's just normal, right? You just be in positions whereby you're in a good stock. And if it
Hmm.
goes down, you wait. It will go up. The stuff that does not go up is the bad stock. The stock like BlackBerry was 140 at some point, went down to $3, and there's no way they can go up again because they're losing money. It's not a good business. So Peter Lynch said, in the short term, there's no correlation, but there's 100% correlation between the price and the value in the long term. So if the company is making money, it's a solid business. By the way, we're not buying lottery tickets in the market. We're buying businesses, and the only thing that you need to evaluate the business on is it making money, because
Hmm.
it doesn't matter how good the products are. If they're not making money, they're not a good business. I will buy their product, but I will not invest in them. Right?
Yeah. So what do you think makes a good stock?
Okay, a few things. Number one, making money. By the way, if you go to any screener and figure out, remove the ones that are not making money, the majority will be out. Out of 6,000, you might end up with 2,000 that are making money versus. So I don't only want them to make profit, I want them to make good profit. So that's number one. Number two, I don't want a lot of debt. So um, because companies that have a lot of debt, they are prone to either go bankrupt or get a hostile takeover. So good EPS, increasing revenue, increasing profit year over year, at least for the last 5 years. So I don't invest in anything that is new. Again, I'm not a speculator. So history, strong history like Apple, Amazon, strong history of making money, strong revenue, strong history of making profit, low debt, have a wide moat, meaning it's not very easy to go and get the market share. For example, Apple does not do the best iPhone, the best cell phones, and for so many years they didn't really innovate that much in the iPhones. If you look at this iPhone and the iPhone 10 years ago, it's kind of the same.
Yeah, it's basically the same.
But it's very hard. Like for me, I will never buy any cell phone that is not Apple. Why? Because I like the integration of the Apple with the MacBook, with the
Hmm.
AirPods, with the AirPads, and there's
Hmm.
this brand of coolness with it. So it's not very hard to change it. If you're using Microsoft, for example, in your company, it's not very easy to go and change it. If you're using SAP, there's a lot of things like that's called a moat. It's not easy to go and just take their market share. The people who have a
Hmm.
good moat, even in bad times, they can increase their prices like Apple, and people will still buy it. So there's a bunch of things that we look for, and if you search for these and you search for them using automated screeners, it's not that difficult. You'll end up with like 20, 30. That's all what you need of good stocks, whereby when you buy them or do options on them, you don't really care if they went down a little bit like Meta, because on the long term, they cannot help it but go up. Because even if the market is stupid and drunk for year two or three, at some point of time, some people will realize these are making money consistently, and people will come back to it. It's just the sentiment goes like comes and goes.
Hmm.
That's the short term, but really on the long term, it cannot go except up. The good stocks, though.
What do you consider a good profit for a company?
Uh, okay, very hard to say because it depends on industry. So we look at basically the net income percent compared to the industry. So we can't just say X amount, because tech companies usually make a little more than utility companies. But you compare it to their industry, so it's not a fixed percent.
Hmm. Okay. Um, Now, with the interactive broker platform that you're using, does that program have all of these screeners that you were talking about to be able to weed out some of these stocks?
It has. I use a free screener that is. I can give it to you after the show. You can put it there. There's a lot. There's so many screeners out there. It's not very difficult to find
Mm-hmm.
one that is free.
Mm-hmm.
So you don't even need IBKR to do this.
Now, if someone's going to get into your program, well, first off, I mean, how many students do you usually take per year into your program?
So every cohort is like 3 months, and
Hmm.
every cohort the maximum I had is 5 people. So it's very
Oh,
small,
wow. Very intimate.
very intimate, because there's a lot of time that like it's again it's not that I'm giving you something like I have to look at each and every one of them every week. They have to share your screen. You cannot hide.
Hmm.
Basically, it's not something that you go like a university, listen or don't listen to the professor or sleep. And no, there's a time
Hmm.
whereby you're going to show your screen. I'm going to ask you questions. Uh, so because again the function of results is in the implementation. It's not how much you hear and how much you analyze. I know this because I'm an engineer. I used to dwell a lot in paralysis, uh,
Hmm.
because that's what I'm strong at. But again, it doesn't matter how many days or weeks I'm analyzing the market. I make zero profit if I'm not in the market, right? So you need to jump into the
Hmm.
pool, even if you don't know how to swim, as long as it's shallow. That's the paper trading pool that I have, and being in the pool with me, I'll tell you to do something that is simple. Week one, I'll tell you how to improve, and but just the fact that you're in the market, in the paper trading, doing trades, that's a huge thing because most people they take courses and do nothing, right? That's the thing.
Hmm. Yeah, I'm guilty of that too. Um, what's the if someone wants to work with you, is there a minimum that they've got to have that's investable?
So because of the way I invest, I ask them the right amount to start with is 10K. Okay, and the
Hmm.
reason is the strategy needs that. Um, if you have less than 10K or less than 5K, I don't accept you as a student, not because you're bad, but at that time I tell them that this is not the best thing to do right now. Right now, you should go try to get some more money so that when you come, I want people, again, I can take people's money all day long, but I don't think it's ethical for me to take somebody's money knowing that by the end of the program, they can't invest and recoup that. So I want them to have the minimum to be successful. So I don't,
Hmm.
I told
Hmm.
people, you know what, that's not the right time for you right now. Go make some money. Uh, anyway, I'm not happy to just take anybody's money without, again, my metric of success is that these guys, by the end of the program, I don't need the 10,000 now, but you will need them after the program because we have paper money. But if somebody told
Hmm.
me I can't get 10K, then the right thing to do right now is go do find a job, go do some work, um, so that you're at the point whereby when you take this thing, I want you up and running. Like, I don't want
Hmm.
you to take the course and just do nothing with it. It doesn't sit well with me. So 10K is kind of the right number.
And how long you been doing this program for?
I've been coaching for about 10 years, but this program itself is very unique. Before I used to do 4 weeks. I started the 12 week. Basically, I revamped and I took the main elements that I want to see because 4 weeks wasn't enough. So I started that kind of a year ago, last October.
And so 10 years that you've been teaching people, and I assume that you've had hundreds of students going through your program.
I have about like maybe 60, 65 overall.
Oh, okay.
And
Yeah, that's a good
and in
amount.
the last year, the 12-week program, it's about 20
Okay.
so far.
And what's been the do you have any success highlights that you can
Yeah, if you go to my
brag about?
YouTube, if you go to my YouTube, usually what I do, and people are so happy to do this interviews with me at the end of the program. They're so happy because they can see the result. It's not just some theory. So if
Mm-hmm.
you go to my YouTube, there is a playlist called interviews and podcasts. So a lot of interviews with me, and another one called testimonials from previous clients. These are 30-minute interviews that I do with a graduating student. To They're not just saying everything is perfect. I asked them, what are the things that was difficult for you when everything clicked together. They all always say that the first 4 weeks are pretty intensive and they're really lost because I ask people to do stuff they don't fully understand yet. Remember, it's
Mm.
paper money, so I know it's zero risk for them. But because I want them in the pool, a lot of people do not want to start except when they know they want to be an Olympic swimmer before they go into the pool, and nobody does. But
Mm-hmm.
you got to start in the pool without knowing a lot, doing small steps. So no, if you go to my YouTube, this playlist called "Testimonial from Previous Clients," they will tell you. So some people did, like Bill, for example, did 21,000 in 3 weeks. But again, I want to qualify. It's not a get rich quick scheme. It's 24%. This guy had a big account, so go back to the 24% or 2% a month. That's kind of what is being not promised, but that's what you should expect reasonably, right?
Mm. And you've had people outpace that as well, I'm sure.
Yes. And here's
Mm.
the thing: the reality is that you don't do 2% a month. A lot of months you can do much better, but a lot of other months when the market is down,
Sure, yeah, it averages out.
the average is 2% or more. But I don't want
Hmm.
to tell people more because again, I don't want the greed
Right.
to come here. Like, so 2% is the average. But again, of course, if you have bigger capital, the 2% will be bigger versus somebody who's starting with 10K. Like, but
Hmm.
it's 2%, and 2% is 24% a year. That's really good. That's twice the market, and it's really good. It's not because the 24%. It's really good because if you need to think of three things, not just the ROI. It's how much time you're giving. It's only 10 minutes a day, right?
Hmm.
And as
Hmm.
well, the risk involved. It's not that high. So these three
Hmm.
have to like, right? ROI versus risk versus the time that you're giving. This
Hmm.
deal that I'm teaching is really good in terms of this because you're paying risk and you're paying time and you're getting the ROI. So the
Hmm.
combination of these two, the ROI is really good.
So I want to pivot slightly because this is something I'm curious about. Um, how do you help people that because a lot of times you could do a self-directed IRA where you or set up an IRA through any trading account, right? But you're limited on the amount of money that you can invest into an IRA per year, right? I think for an individual, it's like
Yeah.
23,500 or something. So, how do you help people mitigate tax liability at the end of the year if they're not using an IRA? With all of these trades, right? Because if you're trading, if you're buying and selling and you're selling it at an uptick and then you're buying into something else, right? Those gains are going to be taxed, right? A
Okay.
capital gains
So
tax.
I need to qualify myself. I'm not a tax advisor or
Yeah.
accountant, so
Yeah.
I'm
Hmm.
just gonna tell you some of the things that I've seen, some things I'm doing. So number one, the bottom line is I don't have a problem paying taxes. Like my most of my effort is in making money, right? Because I can tell you a lot of people are not making money in this, right? If they if, if,
Hmm.
if they are speculators. So most of the effort should be in making money. That's number one. Number two, there's some things you can do. Um, you can you can make it as a business, right?
Mm.
So you can write off stuff. Number two, at the end of the year, you can sell again. If there are stocks that you lost faith in, again, this means that you did not do your homework in the beginning, that these are not good stocks. But you can do something called tax harvesting. So you realize a loss to reduce your. Number three, as well, is the fact that we are not considered day traders because we don't buy and sell every day. So
Hmm.
it's sometimes it's not treated as income, it's treated as capital gain. So again, with your accountant you need to do all this stuff, but there's some stuff you can do. But again, it doesn't take a lot of my brain power. Like
Mm.
I like to focus more in um, and people, a lot of people told me, should I do a corporation to invest with? I say in the beginning, forget about all this stuff. Just start with your own money. When you know that you
Yeah.
can make money, then you can open a corporation and like do the other stuff. But in the beginning, there's so much noise. Just focus on learning, not just how to make money, how to not lose money. And then if I lose it to the taxes, I'm okay because this.
Mm.
But there's stuff to do. But it's not a. It's the same thing if somebody wants to start in real estate. Like, just go do it with your name. But once you know that you can do this and you're making money out of it, you can go to a corporation and do your next deals in that or move the money there. But um, there's stuff to be done. But again, I think the best person is to talk to your accountant on what is the best thing to do. And of course, it depends on how much money we're talking about in
Sure.
terms of capital and stuff like that, right?
So that's a good segue into my next question: real estate or the market? You've done both. Which investment do you like better?
Good question. At some point of time, I thought the only investment that is responsible is real estate. Now I know better. So the way I see the people who are successful at this, they do both. So for
Uh-huh.
me, to make money, at some point of time, you need to be in the three pillars: real estate, stocks, and owning an own business. Right? You cannot
Hmm.
do the three at the same time. You got to focus on one. So a lot of times, if the real estate market is not great, and I liquidate or real estate market at the top and liquidate one, I take the money and put in the stock. Sometimes, like the rotation between these two is really powerful because you're not stuck in one. Like for example, right now, a lot of times, again, when there was a mortgage meltdown in the market, if all what you're in is in the real estate, you're screwed basically because the market went really down. And think of it also as diversification. There's this real estate investing, there's stock investing, and um, there are positives and negatives. The real estate is definitely a solid way to make money. The stocks are more liquid. So it doesn't matter if you have a property with $5 million, you cannot take money out of the property very easily. Versus
Hmm.
in 2 days, you can get the money out of a stock. Um, in the real estate, you can use leverage in terms of I will never buy a rental property without using leverage, going to a bank and getting a mortgage. In stocks, I ask people to never use margin or leverage because it's a very sure way of losing all your money very quickly if the market went down. So I use leverage here. I will never buy real estate without leverage. In stocks, I make sure that people don't use margin. And I give them a lot of
Mm.
examples of people who lost their capital because, and it's very hard because if you have $10, they allow you to go and buy stocks with 33 or sometimes 50, right? And it's very hard for an investor, especially coming from real estate, saying, are you stupid? Why are you making
Yeah.
money with only 10?
Yeah.
Again, the reason is I'm always okay with less profit. It's not that bad, it's 24%, but I'm always okay with less profit because I'm protecting my capital. I will never do
Hmm.
anything that puts the capital at risk. If you lose sight of this, if you lose sight that if you're going to cross the street and you can get hit by a car, it's going to happen at
Yeah.
some point, right? So
Right.
I always know that when I cross the street, this might happen. I'm going to make sure that I wait for the red light. I will never risk it with my capital.
Hmm.
And the
Hmm.
more you get older, you don't want to risk anything. Why would you? Right?
Yeah.
It's not the smart thing to do. But again, that's why psychology is a big part of this mentorship program because you need to have a grip on your fear and greed. Too fearful, you're not going to
Hmm.
do anything. Too greedy, it will. I know the story. It will translate to you losing a shitload of stuff. So getting yourself in these parameters, like control chart for people who are engineers. Like there's a bottom line of fear, and there's a maximum line of greed, and you have to be in this healthy part. Going too much into
Hmm.
one will end up bad.
Hmm. Yeah, that's great advice. Yeah, and it's interesting that you said that you should do only one thing at a time. Real
Because it,
estate.
yeah, because it needs focus, right?
Hmm.
If you have this shiny, what do you call it, shiny object syndrome.
Yep.
These people were out every 3 weeks, they're doing something new. I'm going to go to
Mm-hmm.
crypto, and then I'm going to go and buy Amazon FBA, and then after 3 weeks, I'm going to go into day trading, and then after 3 weeks, I'm going to go do Bitcoin, and then after 3 weeks, I'm going to go do scalping, and then after 3 weeks, I'm going to go jump into real estate. You end up losing in all of them because it needs focus. It's not like
Yeah.
chasing quick, get rich quick. You need to sit down, focus, learn, because you're going to make mistakes, right? It's not like, yeah. So my method or my teaching is that focus on one for a little bit till you understand the kinks of it and make money out of it, stabilize it before you. It's the same as real estate. You can't just buy a real estate property every month. You gotta wait, stabilize this thing a little bit, make sure that there are, like, what's the point of buying the fifth property if the first one does not have tenants? You know what I'm saying?
Yep.
Just,
Mm-hmm.
just relax, right? Do
Yep.
one, figure out the mistakes so that when you buy the second one, it's better, right?
Mm-hmm.
So
Mm-hmm.
that's my thing, is that if you go into more than one of the three, chances are you're not gonna give it enough, because again, if you, I always say, if your parent is not a billionaire and he taught you this stuff, you gotta learn it the hard way,
The
right?
hard way. Yeah.
Yeah,
Yeah.
right. And first thing,
Mm-hmm.
it needs you to be responsible. I'm the captain of my own ship, so you know what? Yeah,
Mm-hmm.
my parents are not rich. I will learn this on my own. It's not gonna be easy, but I will learn it. So first thing, take responsibility that you're gonna do it. Number two, you get enough focus. You understand that it's not a get rich quick scheme, and that so it needs all these things to be right, whereby you're taking responsibility, so you're not crying the fact that you're not rich, the fact that you know that nobody will make you rich, not the government, not your parent, not anybody. It's you, so you got to learn it.
Mm-hmm. Mm-hmm.
Three, you're starting with a lot of things that is not in your favor. You don't have a lot of money. You don't know, so you're gonna probably make mistakes. So you got to go through all these walls. It's very hard to do it on three different fronts. You know what I'm saying?
Mm-hmm.
Even in real estate, you can't go buy and hold and then flip and then do wholesaling. You got to stick to one method. You know what I'm saying?
Yeah.
It's just,
Mm-hmm.
you got to take it seriously. It's a business, right?
Mm-hmm.
It's not a hobby at the beginning, right? You got to make
Yeah.
it right. Um, so yeah, my 2 cents. Very hard to go do more than one at the same time.
And so to become one of your students, what does the investment look like?
So I'd rather people come to learn more about what I do. And what I
Mm-hmm.
usually do is that I have a one-on-one with people to qualify them, to make sure that you're the right student. Because if a lot of people, they say no after this meeting, or I say no if because a lot of people, like, if I know that you want to come and learn day trading, it's not a day trading course. So we have to have this discussion first, and then I'll work with people to figure out what is best in terms of if they want a payment plan or something like that. But I like to have this one first to see if it makes sense.
Okay. Uh, Last question. How often are you guys trading? I mean, if you're not day traders, what's the average number of
Right.
times you guys are trading per month?
Okay, got it. It's very low. So let's say if you have $10,000, this will equate to one or two movements for you per month. You
Oh.
still need to go and look. So it's a very low touch point. And that's
Hmm.
by design, because these are busy professionals from 9 to 5, right? They
Mm-hmm.
don't
Mm-hmm.
want to stay at the screens all day. So you go
Mm-hmm.
in, you look, you know exactly when to go in, when to do something.
Mm-hmm.
And so $10,000, one a month, 1 to 2 a month. And then if somebody has 100,000, then you can expect 10 a month, right? But again,
Mm-hmm.
it is very low touch, does not take a lot of time. Of course, you need to know what you're doing first in this 3 weeks,
Sure.
3 months.
Sure.
But after that, it's not time intensive at all. And if you do that properly, you should be getting 24% a year,
That's
which is
awesome.
very good. 24%, you double your money every 3 years, which is great.
Yeah. Well, and that's one of my businesses is real estate, right? We do
Yeah.
syndication,
Mm.
and that's kind of one of our pitches is we outpace the market,
Yeah.
plus you get the depreciation, so you
Yeah.
get tax write-offs,
Good.
and you are typically 2 to 3x in your money every 3 to 5 years depending on the deal.
Okay. Beautiful. Good. Good.
Yeah, so very very similar returns. But like you said, it's managing a multi-unit property is probably, I wouldn't say it's much more difficult, but it's more labor intensive than what you're doing.
Yeah, definitely the stock market, the way I do it, is less labor intensive than owning real estate. You don't have to deal
Mhm.
with tenants and toilets and all this crap, right?
Yeah,
So,
yeah.
so it's, but both are good. Both for me are
Yeah.
good. You need to be in both at
Yeah.
some point.
That's great. Fadi, thank you so much for coming on. Where can everybody meet you, learn more about you, get a hold of you?
I'm on all social media, so my name is Fadi Fadi Habib Habib. So you can find me on LinkedIn or Facebook. My company is called Legacy Wealth Builder Academy. Website is legacywealthbuilderacademy.com, or you can also email me at info@legacywealthbuilderacademy.com.
Awesome. Thank you so much for coming on. I'll be sure to add that all to the show notes.
Bo, thank you very much.
You're welcome.